Hi again. Now we'll tackle how multiple jobs lead to insufficient withholding and how to fix it. Now, recall in part one, we have a taxpayer profile whose annual salary is $80,000, all from one job. We use the salary calculator at Paycheck City to see that $354 is withheld for federal every paycheck. When we multiply that by 26, we get the total federal taxes paid for the year. Now, remember, we apply the same steps to state if you're in a state with income tax, but we're focusing on federal now. To find out the tax charged to him, we look at the standard deduction and the tax rates for filing status single, and we see that the tax charged to him for the year on $80,000 of salary is $9,214. Now, when we compare the total withholding for the year to the total tax that was charged, we see that we nearly break even. Now let's look at what happens when our taxpayer has the same total annual salary of $80,000, but he makes it working two jobs at $40,000 each. Here is a profile for each $40,000 job. We see total withholding for one of the jobs is $2,761.46. Again, that's what we get from the salary calculator. At the end of the year, we are taxed on total income, whether from one job or two jobs. So we take the total withholding from both the $40,000 jobs and compare that to the tax that was charged for a total $80,000 salary, which we already calculated, and we see that there's a huge deficit. Now, because of the progressive tax rate that we use in this country, the withholding can be correct on $80,000 for one job, but insufficient with two jobs at lower salaries, even if they add up to the same $80,000 of income at year end. The simplest fix is to edit your W-4 form, and you choose the box that says two jobs. This is sending the signal that your total income is going to be higher, and so the withholding should be higher to match. The same issue impacts married couples, but there is a different fix. To demonstrate, we have a married couple with one job at $80,000 of salary, and based on the salary calculator for married filing joint, not single, the federal withholding for the year is a total of $5,522.92. So now the married filing joint standard deduction is $30,000. We apply the married filing joint tax rates to $50,000 because we took away the $30,000. And you can see the withholding is sufficient for the tax bill charged on $80,000 to a married filing joint couple because they nearly break even. Now let's see when each spouse has one job making $40,000 each annually. You can see the difference when the $80,000 comes from one spouse versus two spouses making $40,000 each. Whereas the single person fixes this by choosing the box that says two jobs. The married person can also fix this by choosing single for each job on their W-4 forms. And then when you add up those withholding amounts by the end of the year, that lines up with the taxes that are charged on a married filing joint couple. If you have tax filing issues or have a tax notice from the IRS, book an appointment with Tax Navigator Solutions. And stay tuned for the last part of this series where I go step by step to demonstrate how deductions and credits reduce your tax bill. Ciao for now.